Hey everyone and welcome back to Money Journey. In today's video, we are diving deep into one of the most talked about Chinese tech giant, Tencent, ticker symbol TCEHY. Over the past year, this stock has seen an impressive surge of 64%, making it a standout performance in the Chinese market. But here's the intriguing part. It's still sitting at a significant 22% below its all-time high. This begs the question, is this the perfect moment to add Tencent to your investment portfolio? That's exactly what we are going to explore in this video. We'll be taking a close look at Tencent's core business and what gives them a competitive edge. We'll also analyze the current situation of the stock, dive into the fundamentals and perform a valuation to determine if Tencent truly represents a compelling long-term investment opportunity. If you are looking to uncover potentially undervalued stocks and understand how to analyze companies like a pro, then you are in the right place. So let's get started. For those who might be less familiar, Tencent is much more than just a social media company. They operate a vast ecosystem of incredible popular and profitable business. Think about WeChat, the ubiquitous messaging and social platform in China, with over a billion active users. That is Tencent. They are also a global powerhouse in the gaming industry, owning stakes in some of the biggest names and developing their own blockbuster titles. But it doesn't stop there. Tencent has a significant presence in cloud computing, digital payments through WeChat Pay, and even online video streaming. Their competitive advantages are truly formidable. They benefit from a massive and highly engaged user base, creating strong network effects. Their ability to seamlessly integrate service within their platforms, coupled with their constant innovations and strategic investments, makes them a tough competitor to beat. This diverse and dominant position in key digital sectors makes Tencent a force to be reckoned with. Let's look at the fundamentals of Tencent. I have to tell you guys, in my opinion, Tencent is even a better company than Alibaba, and I will show you why. Look at the year 2022 and 2023. If you are like me and like to look into Chinese stocks, you see that 2 years were really bad for Chinese stocks. Revenues were down, a lot of pressure, the consumer was not buying things, and we see declines on Alibaba, JD, for example. But if you look to Tencent revenue, for example, and profits, they remain very resilient. If you look to the revenues of Tencent, it's a trend going higher, and the free cash flow as well. So this shows that Tencent business, besides being very high quality and very good, it's very resilient, and that's why Tencent is performing better than Alibaba and JD, for example, in the last 5 years. So Tencent has a market cap of almost 600 billion, double of the size of Alibaba. It's trading at a P of 22.8, forward P of 16, price to free cash flow of 17. This looks like very cheap, especially if you compare or if you evaluate the quality of Tencent business. That is incredible. In terms of margins and growth, they have been growing around 14% per year, gross margins of 52.3%, net margins of 26%, but free cash flow margins last year were around 28%. Even though they are investing a lot in AI, their capex this last year 2024 increased by threefold, I think. So if it was not for Tencent investing a lot, their free cash flow margin would be above 30%, maybe 33, 34%, so which is incredible high. Their balance sheet is incredible. They have around 43 billion dollars in their short in cash and short-term investment, and their long-term is just only 35 billion dollars. So they have a net cash position that is positive, which is incredible and what we love to see. In terms of returns on equity has been around 18%. Return on invested capital last year was 12.6%, but the 5-year average return on invested capital it's 16. So if you look to the return on invested capital is going down, but it's starting to recover again. The reason of that is because they are investing a lot, profits are not going higher at the same rate of investment, because when you invest it takes time, there is a lag effect. So for these returns to start, for the returns of these investors start to be on the return on invested capital, we need time, and I hope we see that in the future, returns going up again. So looking at our money journey checklist, it's all check marks, a fundamental score of 82 out of 100. It's an incredible company. So they've been growing around 14%, gross margins of 52%, which is very good. Free cash flow margins of 30% in the average of the last 5 years, which is a check mark. Low debt, they have more cash than their long-term debt, so that's really good. Returns on equity on an investment above 15%, which is very good. In terms of moat and competitive advantage, we have talked about that's an incredible business, a tough competitor. They are leaders in a lot of segments: fintech, gaming, communication, and social media. For example, with their WeChat, that's incredible. That's an asset they have, that probably their most valuable asset. So it's a wide moat, and a company that I would say that will be on China for the next 10-20 years for sure. They have been free cash flow positive every year, with recession, economy in a slump. They have been profitable, growing, which is incredible. So Tencent is like the best company in China, in my opinion. In terms of returning capital, they are paying a dividend. They do some special dividends. I've been a Tencent shareholder for 3 to 4 years, so that's been really good for me. They have been paying dividends. They have been buying back a lot of shares, even though we don't see the shares outstanding going down by much. That happened because Naspers, which is a major shareholder from and Prosus, they have been buying back, they have been selling their shares. So Tencent is buying back the shares they are selling. So we don't see shares outstanding going down because of that, because they are buying back the shares of a major shareholder. But that's incredible. They are returning capital, and that's a sign that their management team is very good, and it is. Dash co-founder and CEO Pony Ma is an incredible CEO. They are being creating a lot of value for the shareholders in the last 20 years, and I'm a huge fan of their job, and that's one of the reasons I'm a shareholder of Tencent. But the company is up a lot, being very resilient in the last few years. But in the future, can we have really good returns investing in Tencent? Let's do our reverse discounted cash flow analysis. So Tencent is a Chinese company. For me, it's a low risk investment in China, but of course there is the risk of investing in China. So for my base case, my discount rate will be around 13%. In terms of or shareholders yield, they have been buying back around 2% of the company. They pay a dividend of 1%. In terms of margin, I'm assuming 34%. Last year it was 28%, but it's a year they are investing a lot of capex, so free cash flow margins are lower. But for a trough year, if you look to 2019, 2020, 2022, they had 33% free cash flow margin. So I do really believe in the future, with them growing, the Chinese economy recover, they can have margin around 34%. In terms of growth, they are expecting to grow around 9%, 8.5% in 2026. So I'm assuming a growth between 9 and 7%. In terms of P, what is the P this company deserves in 10 years? For me, they deserve a major premium because of the quality of their business, their resilience, their business model, and there is something that will be very hard to disrupt. And I really love Tencent, so I really believe they deserve a premium. So I'm assuming a 22 PE. You could assume a higher PE. I've seen investors assuming a higher PE than that. You can assume lower because it's a Chinese company. I'll prefer to, in terms of PE, assume the premium or the PE that the company deserves, and I prefer to add my margin of safety in the discount rate. That's why I have a 13% discount rate for Tencent. If you want just the intrinsic value, should use a 9-10%. That's the base case return that you want for a company or to invest in a company. But since it's a Chinese company, the risk is higher, so I have to assume a higher discount rate, a higher margin of safety. So this is my base case. I always assume a bull case and a bear case. My bull case, it's a more optimistic case if Tencent business really booms. Bear case, if you see deflation on China, difficulties in the Chinese economy, and it's difficult to grow, margin pressures. So with these three scenarios, I came with an intrinsic value for Tencent of $47 per share. Bear in mind, I invest in the European Stock Exchange. I invest in the Amsterdam Stock Exchange, I would say. It's a NNND ticker symbol, so I will assume this price in euros. So my fair value is 47. Right now it's trading at 60 euros per share. If you look at the US stock exchange, it's the TCEHY, which is trading at $65. So for me, it's slightly overvalued. I'm not very interested in buying Tencent at this price. It's not very cheap for me to invest, but I'm still holding in my shares, even though it's slightly overvalued or above my fair value. I would say it could be a fair value for the company, especially for the quality of Tencent, and I will be holding my shares. But that's just my opinion. You have to do your due diligence and do what pleases you. So I really love Tencent, probably my favorite company on China, but it's not trading at cheaper valuation when you compare to other Chinese companies, for example. But it's a company I'm really comfortable to holding in the near future. Alright, so we have taken a comprehensive look at Tencent, exploring its impressive business portfolio, its strong competitive advantage, its recent stock performance, and touch upon its fundamentals and valuation. The key takeaway here is that while the stock has seen a significant recovery, the question of whether it's a perfect buy opportunity really depends on your individual investment goals and risk tolerance. What are your thoughts on Tencent? Do you currently hold it in your portfolio, or are you considering investing? Let me know your opinions and any questions you have in the comments below. I always love hearing from you. If you found this video helpful and want to see more in-depth stock analysis and investment insights, make sure to hit that like button and subscribe to the channel for future updates. Thanks for watching, and I will see you in the next video. This video is for informational purpose only and should not be considered financial advice. Always conduct your own research and consult with a qualified financial advisor before making any investment decision.